is the Equities Portfolio Manager of BIMI. He recently joined last September 2020. He is responsible for the management and investment performance of the equity portfolios. Prior to joining BIMI, he was a senior equity analyst with Manulife Asset Management, where he led the research efforts to the equity desk across all sectors of the Philippine Stock Exchange. He was also an equity analyst for Valiant Securities, a U.S. research boutique firm that runs its own private hedge fund. Let's give it up for Mr. Michael Enrile.
Hey, hello everyone. Good afternoon.
Good afternoon, sir. The floor is
good morning pala. That's what that's what you guys say, no? So I'm Michael Enrile, not in any way related to our former senator. We'll be proceeding with the discussion to our local investment outlook. So for the first slide, here's just our view at a glance. So for the Philippines, we expect the economy to grow by 5.1% as it recovers gradually from the pandemic in 2020. It's not going to be a tough base to beat considering 2020 was really a very down year. Alam naman natin lahat that I guess the economy or yung mga negosyo nga are really struggling. So we're coming from a really low base. So 5.1%, that's our call for now. We think that's still possible to achieve. For the currency, we see the dollar ending the year at 48.90. So slight peso weakness from here. For the PComp or the Philippine stock market, we're looking at an index target of 7,000 for our year end. We have a neutral view on bonds and see interest rates remaining steady at current levels, despite seeing some more potential volatility from time to time. So next slide, please. Let's just start off with a recap of what happened to the Philippine stock market so far in 2021. The PSEI or the Philippine stock market declined by 5.6% for the year-to-date period as of last Friday. Well, that's of course thanks to the big moves during the last couple of weeks. I think a couple of weeks ago, we're still parang down pa tayo more than 12%. So as of last Friday, we're only down just below 6%. So similar to last year, market weakness can still be attributed to COVID-19 and its impact to livelihoods, the economy, and corporate earnings. We started 2021 just above the 7,100 level, if you can see on the chart, after a very strong rally in 2020. So by the end of 2020, yung stock market is actually up 50% from the very low of that year, no? So meron na rin mga tao na actually marami na rin kumita, and that's why marami na rin nag-take profit during the start of the year. Then eventually, nagkaroon ng disappointments over the vaccine procurement and the speed of the rollout, which also became the focus of the investors, which led to more selling in the market. No? So profit taking first, and then disappointment in terms of handling the COVID pandemic that came in second, which prompted the decline in the market in 2021. Tapos, then COVID cases started spiking again. A couple of months ago, we saw 15,000 daily cases, leading to new rounds of stricter quarantine rules in an effort to control the spread of the virus. However, the economy and the companies are, of course, affected negatively by those measures as people, again, stay at home most of the time. Next slide, please. Speaking of COVID, so this one shows the breakdown or the running tally for the Philippines. So we have over 1 million cases now. Daily new cases, the yellow line, spiked sharply in March and April, reaching highs of more than 15,000 a day after stabilizing in the 1,000 to 2,000 daily case for a very long time. The massive spike in cases led to NCR and nearby provinces reverting back to ECQ for a couple of weeks, which then got downgraded to MECQ, and now nasa GCQ na ulit tayo. In April, hospitals sobrang puno na. Utilization rates are very high and medical professionals are really working double shift just to handle the cases. So far, the stricter mobility restrictions implemented did prove to be effective in controlling the spread, with cases steadily declining to 3,000 to 4,000 daily for a time, but has since then risen to 6,000 to 7,000 again as of late. But still, that's still far from the 15,000 highs a couple of months ago. And then on the next slide, which is on the vaccine front, over 5.2 million Filipinos have already had one shot of the vaccine, at least. And out of that 5.2, actually 1.2 is, so 4 million at least got one shot, and then 1.2 got 2 doses already, for a total of 5.2 million vaccine administered to the Filipino community. So the vaccination pace is picking up. It improved significantly in May, with daily vaccinations hitting an average of more than 150,000 a day, with some days actually reaching more than 200,000 doses. So this is a big improvement from the below 70,000 daily in April. The Philippine target is to administer 500,000 doses a day, but that's also subject to supply availability. And then we're looking at around the government is looking to administer at least 16 million 16 by the end of this month. So we've got 10 million or so more to go, so let's see. So just to highlight, vaccination is important to protect yourself and your family, and that also, if you protect yourself and your family, you'll be also helping the economy, because it will help us reach faster. I mean, get us back to our normal lives faster, So pwede na tayo umalis uli, go to the malls, eat at restaurants. So in that way, businesses earn. So pag kumikita yung mga businesses or yung mga negosyo, they might expand, So in that way, pwede pa sila kumuha ng ibang employees. So forth, So kung may bagong company, may bagong store kukuha sila ng bagong mga tao to run that store. Magkakatrabaho yung mga tao na yun. So may pera na naman sila to spend on other stuff. So other companies will also earn, and so forth. So it's a cycle. So that's why for those that are still, I guess, skeptical on the vaccine, please reconsider on taking it. It's going to save us. It's gonna save us physically and also economically. So these are the things that investors, not only local but also foreign, are looking out for. So they're looking at for the progress in the number of vaccinations. And on the right hand side, it's just the sort of timeline in terms of when the government expects the vaccine to arrive. So we're still looking at around 100 million. Tama ba? Yeah, close to 100 million for the second half. And then next slide, please, Dom. So despite some improvement in terms of controlling the virus and the speed of vaccination, we continue to lag behind our neighbors. When speaking of neighbors, it's yung Southeast Asian countries na kasama natin. So like Singapore. So as you can see on the left-hand chart, the Philippines was the most negatively impacted in terms of GDP in 2020. With the economy contracting by 9.5% so far in the first quarter. So far in the first quarter, we continue to fall behind with a 4.2% decline, while the others are displaying less contraction, and with Singapore actually growing positively already for the first quarter. So on the vaccination front, which is on the upper right chart, the same can be said. So we are more in line with Thailand in terms of the percentage of population getting vaccinated. At 5 million Filipinos, that's equivalent to roughly 3.6% of our population. Again, Singapore is an outlier. Malayong-malayo sila with the rest of the region. Having people of having at least 39% of the population getting inoculated at least once. One dose. No? So taking the GDP and the pace of vaccination, we can see on the lower right-hand portion of the slide why the Philippines in terms of stock returns or the stock market is still at the bottom of the pack. Singapore, unsurprisingly, is showing the strongest market return year to date. This is as of Friday because of their positive GDP na nga and the very fast administration of the vaccine. Next slide, please. So with that, given our weaker prospects than our ASEAN peers, global funds continue to sell Philippine holdings. So with net foreign selling now amounting to more than $1.3 billion US. So that's more than half already of last year's foreign outflow of 2.5 billion. So when we say foreign funds, sila kasi they have that option, like a Blackrock, they have that option to invest in various locations. So for example, they see that the Philippines is not as good in terms of handling the pandemic, like a Singapore, for example. They can just dump the Philippines and just move all their money somewhere else that they think that's doing better in terms of like handling the pandemic. So yun yung particular reason why we're getting sold off. However, good news, as of late, like the last couple of weeks, accompanying the market rally, foreign ownership in the Philippines, foreign net inflows, medyo bumabalik na, no? I think the last 2 weeks, we saw more than $100 million US. So there's this reversal taking place. We think this is probably because of the improving vaccination situation locally. Again, we came from 70,000. Now we're doing a little more, closer to 150,000 daily inoculations. So the investors or foreign investors are taking notice of that. As well as in sa abroad kasi, again, Singapore, it's up 10%, Philippines down 5%. In the US, continuously, the stock market is just going up. So that might also be a reason why foreign funds are moving to emerging markets, including the Philippines, because other markets have already done very well. So parang, I guess, relative to us, mahal na sila. So they're moving their money back here. Yun nga. And as I said, the US kasi, sobrang taas na ng stock market. And that's despite having, cases of more than 1 million people, 1 million people added every day, back then. So parang it didn't really stop the market from moving higher. So I'd say that's really very much the reason why investors are starting to take money out of developed markets and bringing them back to emerging markets like the Philippines. So next slide, please. Okay, so due to the market move as of late, we are now trading at 19 times PE, above the 10-year average of 18 times. So when we say price to earnings, it's just the ratio that you pay for every peso that the company, or in this case, the whole stock market is earning. It's used as a measure to see if the market is trading cheaply or expensive relative to itself or others. No, despite the big move up, we think this is still an opportune time to invest in local stocks for those that have an aggressive risk profile. So you may be wondering, teka lang, di ba sabi ko, yung PCOM target namin is around 7,000 lang. So we're already at 6,700. So hindi ba yung upside mo is capped or it's very limited? So I'd say the market may be trading at a premium relative to historical averages. But we think this is only justified, and that is because of very high corporate earnings growth for this year and the next. So for this year or 2020, we're looking at 35% earnings growth at least. That's the minimum, for 2021 that we're looking at. And then another 20% in 2022. So back-to-back double-digit earnings growth. So, and furthermore, we expect to see upward earnings revision for this year, given the strong first quarter earnings season. And therefore, earnings in the, yung PE, yung ilalim niya is earnings. So by mathematically, kung lumaki yung E mo, which is at the bottom or the denominator, liliit yung pool ratio mo. So that in this case, maybe yung 19 times natin is just not yet adjusted. It might be actually 18 times or maybe even lower, no? So we think there's scope for the 7K or the 7,000 index target to increase. I think I would relate this example with an iPhone. So like not too long ago, iPhones are not as ridiculously expensive as they are now. Magkano na bang iPhone 12 ngayon? Around 60,000. I think 10 years ago, I got an iPhone 4 for around 20,000. So just, it tripled, no, in over 10 years. So technology costs in general are getting cheaper. Kasi, there are more advances being made in terms of like production, getting efficiencies in terms of like producing, efficiencies in the cost of production. So in terms of production cost, that nagmumura pa nga siya eh. Pero that's not the case with iPhone, no? Sure, there's some upgrades here and there. Maybe the camera is 20% clearer, or the processor is faster by a bit than the older model, no? But the increase in price is way more than the increase in performance. Plus, they keep reducing the accessories. Diba, una nawala yung headset. And then, yung latest one, nawala na yung charger. So, alam mo yun, the current iPhone is expensive, but if you're seriously considering on getting one, just get it. Kasi baka next model mas mahal na siya. Tapos you'll be getting less, di ba? Alam mo, that's how I relate it to the market. Na prices may be expensive now, but they're only going to become even more expensive going forward. Sure, there's potential for the market to decline, but at least it can also earn, no? So with an iPhone, your monetary value, if you buy it, it will decrease immediately, no? So like when you open the box, maybe not even open the box, second-hand na siya. So you can't really resell it back at the same amount, most likely. On the right-hand side of this slide, earnings are recovering nicely from last year. So for the first quarter, 17%. For the full year, we're looking at 35%. So we're expecting a lot more growth in the coming quarters para umabot tayo dun sa 35%. And that's not going to be a tough task kasi last year, bulk of the second quarter was almost all under ECQ. If you recall, the business district or the malls, talagang ghost town siya eh. So no earnings whatsoever, very minimal earnings. So just year on year alone, malaki yung magiging improvement. Which is why we think there's really going to be, the 35% is easily going to be achievable. And then cost controls and the newly passed CREATE law also helped the first quarter earnings. For those who have not heard the CREATE law, it's the law lowering income tax rates for companies from 30% to 25%. Therefore, giving companies more income to keep, maybe use that income to expand the business or give as additional dividends to shareholders. Meanwhile, cost controls or belt tightening, these aren't going to be temporary. The pandemic forced these companies to make their operations more efficient to remain profitable, no? And so I'm sure, I guess kung na-discover nila yung formula na yan, they're gonna keep on doing that or retaining those practices going forward even after the pandemic. Maybe dati kailangan mo ng 10 na employees for your business. Then kailangan mo mag-cost cut. You just cut it to 7. And then turns out yun, medyo bumabalik na yung business, but you can still do it on just 7. So you're gonna keep it on 7, right? So what I'm saying here is the businesses found a new avenue of growth, no? So, and that's coming from reducing costs. So next time, assuming we get over this situation, we expect revenues or the top line or sales to start recovering already, no? So meron kang double growth coming from improved sales or the top line, and then also reduced costs, which will materially grow your profits or yung kita ng companies. So just more on the earnings. During the quarter, consumer companies posted the biggest growth in earnings. This was mainly because of the pantry stocking done before we went into late in March of 2020. Meanwhile, transport or a global company saw robust growth due to faster growth rates in other economies. Power, electricity, steady lang yan. Just like telecoms. Banks also grew profits. Property, on the other hand, saw a 25% drop year-on-year because of weakness in construction activity and low foot traffic in the malls. No? Lastly, gaming or casinos turned to a net loss year-on-year. So I guess gambling is just not on the top of mind during this period. So again, the market may be trading at a premium relative to historical average, but that's because of strong earnings expectations for this year and 2022. There may have been doubts in the beginning of the year if companies can deliver, but as the first quarter earnings season showed, they did meet expectations and then some, no? With the exception of property and gaming sector, and even those, there's no risk of them going bankrupt or going under. Financially speaking, most companies managed to remain profitable. I mean, itong mga to, maybe they're not as profitable as last year, but they're still kumikita pa tong mga to, no, despite the pandemic. And that's why we think these companies or these stocks deserve to trade where they are. And considering all the negatives, the Philippines lagging behind in ASEAN and foreigners not liking the Philippines as much as the others, what it does is it provides us as investors this window of opportunity to come in at more attractive levels. So parang pinagbibigyan pa nila tayo na, start accumulating, start investing, para pagbalik nila or once they push up the market, yun na, parang kumita ka na rin, di ba? Para naunahan mo sila. So I guess once the story plays out in places like Singapore, in the US nga, eventually the Philippines will get its appeal back since the market here got left behind. And then on the last slide lang, it's just the risk. So on the upside, our view is a faster than expected rollout of the vaccine, resulting to looser mobility restrictions and increased economic activity. As such, foreign investors again will start considering returning to the Philippines if that happens. No? So that will drive stock prices higher. And then the flip side, downside risk, of course, delays in the vaccine pa rin yung pinaka na-highlight. And the resurgence of COVID cases, both of which are already happened. Then investors may be a bit more cautious by the end of this year since next year is a presidential election year. Investors typically just stay on the sidelines or have a wait-and-see approach until at least there's a more clear-cut winner in terms of like the presidential race and what his or her economic policy is going to be like. That ends my portion. Thank you. I'll give it back to Morgan.
Thank you so much again, Sir Michael. Grabe. Dahil dyan, talagang napapaisip akong i-upgrade ng 10-year-old iPhone ko. If you have any questions po, feel free to drop it down below sa chat box natin. Nandyan po si Sir Mark, si Mr. Mark Medan, and si Mismo Espanyol para po i-take note yung mga questions natin. Okay, moving forward to our third speaker. He has been with BIMI for around 6 years now and currently overseeing BIMI's product development, marketing, and institutional third-party distribution initiatives. He joined BPI in 2015 as BIMI's first wholesale distribution officer. Prior to joining the bank, he was with the Deutsche Bank investment banking operation where he did fixed income and derivative valuation as well as sales middle office. Friends, let's give a virtual warm applause to Mr. Dominic Yatco. Hi, Sir Dominic.
Hello, hi. Good afternoon.
Good afternoon, Sir Dominic. The floor is now yours.
Okay, I'll share my screen. Ako din yung operator. Dito, sige. Thank you, Terena and Mike, for the insightful outlook, both in the global and the local space. So actually, many people would from that, many people are asking what would be the good investment opportunities. So with BIMI, we are presenting maybe 3 of our 19 funds that can be attractive, no, for you, no, especially the ones that was recently launched, no. So okay, this is just a background. I think na touch na to ni Morgan, so I'll just move forward. So the first feature fund that we have is the ALFM Eurobond fund, no. So I think this is the only euro denominated fund in the country. So it invests, no, in fixed income securities. What's good about this, no, even if the interest rates in Europe is negative, no, it still provides positive returns, no. What's also unique, no, with this fund, it's how it's valued or managed. So similar to all of our other fixed income funds, most of the way the ALFM funds are managed is in a very risk averse or very conservative manner. No, we believe in long-term growth and stability. No, I think coming from an institution that has been with us, no, for more than around 170 years. No, stability is really quite important for us. No? That it also gets reflected in how we manage people's money. So for the ALFM Eurobond fund and with the other funds, no, majority of the portfolio is valued at amortized cost. No? So it means it shields itself, no, from market volatility. Although hindi siya ganun ka-exciting, no, it doesn't grow as fast, no, but the growth of the fund is steady. No? So if you can see at the lower graph, medyo the benchmark index or the Eurobond, government bond index, medyo magalaw siya. Whereas for the Eurobond fund, although may mga galaw siya konti, especially towards the end of 2019, if you can see, medyo stable yung pag-akyat niya. Dahan-dahan lang siya. So that's something that we really value, yung stability and long-term growth. The next fund that we have is the Philippine Stock Index Fund. So this tracks the performance of the stock exchange index. Given what Mike said earlier, no, we are expecting, no, as we roll out the vaccination in the Philippines, we are expecting, no, to reopen the economy. No? So of course, there's opportunity for us, no, to take advantage of that, especially if you're the type of investor that would want to stay invested for the long term. I think that the prospect for the Philippines as a country is still positive, no, given our demographics still favoring, no, for long-term growth. And then the newest funds, the fund that we have, it's a feeder fund. It's the first feeder mutual fund in the country, and it's also the first income-paying fund. So we pay out monthly dividends. So this is actually managed by Blackrock. No, that's why they're here with us. No, this is a partnership that we started back in 2019. No, so it pays around 4.39% per annum in dividends. So okay, just to give more color, no, with this fund. So this fund is actually a feeder fund. So what happens is that yung fund namin, which is the ALFM Global Multi-Asset Income Fund, invest only into one security. And that security, or 90% of its asset is invested only into one fund. No, in this case, it's invested in Blackrock's Global Multi-Asset Income Fund. No, as what Terena said earlier, they're the largest, no, in the world. I don't think they will be the largest if they're not good at managing funds or assets. No, we strongly believe, no, in their capabilities in growing the fund and managing the funds properly. No? So the reason why it's multi-asset in nature, which means that it can invest in various asset classes at the same time, various jurisdictions or countries. No. So if things, no, like what Mike said earlier, if the fund manager of this fund thinks, no, the target fund, no, thinks that they can be more opportunistic in other jurisdictions or other countries and other asset classes, then they can shift, no, easily. It gives them the flexibility to be more agile, no, in riding volatility. What's good about this fund? I lifted this from one of the Blackrock slides before. It provides it's managed. Wherein risk is as its core. It doesn't take on too much risk to give out the monthly dividend. So if you can see, most of the during the times of market stress or crisis, if you can compare it with other asset classes, yung loss niya, of course crisis to, so lahat loss, yung loss niya is smaller or lower than the others, which proves na, of course, yung stability or the resilience is still a key factor. I think this is something that also with BIMI, that's something that we take care of properly, or we teach. That's part of our main investment strategies. So actually, with the completion, just to show you, the complete lineup of the funds. Most of our funds, especially on the fixed income side, together with the PAMI funds that I assume that you are quite aware, they provide the full complement, on different market scenarios. So we have a fund, a product that's more on the defensive side, which are the Alif funds, and then of course there are products also that's more on offensive, or that's more on taking on the market volatility, riding on the market volatility, which are the PAMI funds. I think with the funds that we manage, that's something we take pride of. I think we're the only fund managers here in the Philippines that would offer products, or have products that would fit different market scenarios, in whatever we may face. So this is just a summary of what we have right now. It's all available in the website. So I think what the newest one and the most attractive, most popular right now is the income paying fund. We have it both in the USD and the peso class. So you can invest in a global portfolio without having the US dollars. You can directly invest in peso. So this is a summary for everybody's appreciation. Yeah, so for us, we just, for account opening, you just follow the same forms. And then of course, I think what's new now, we would request for potential clients to nominate settlement account, especially for those investing to the income paying fund, because doon namin i-deposit yung dividends every month. And then of course, we have more in terms of subscription. We have two ways of subscribing. One is via BPI bills payment, of course, BPI kami. And then of course, this is new, with Dragon Pay. So you can actually fund your investment using any bank account through Dragon Pay. So hindi mo na siya kailangan withdrawin, dadalhin sa BPI. You can do it online. So these are the partner merchants. So most of the bigger banks or the retail commercial banks are covered here. So I think with the pandemic, it was proven that it's very hard especially to transfer from one bank to another. So that's why we find a way to make it convenient to our investors. So that's it on my presentation. It's very quick lang. I think I give back the floor to Morgan.
Thank you, Sir Dominic. Thank you po. Si Sir Dominic po, isa po yan sa napaka-supportive natin na partner. At ngayon po sa IMG, meron na naman po tayong bagong product under our arsenal. Hindi lang po peso-denominated fund, hindi lang po dollar fund. Ngayon po, we have a Euro fund na rin. And ayun po, ang tinatawag natin na ALFM Eurobond Fund. At syempre, meron pa po tayong another product na sobrang ganda. ALFM Global Multi-Asset Income Fund na nagbibigay po ng monthly payout. Grabe. At thanks again, Sir Dominic. I do hope you enjoyed and had a great time today. Thank you again to our sponsors, Rampver Financials, BIMI, the fund manager of PAMI and ALFM Mutual Funds, and to IMG for making this event possible. And of course, thank you very much to all our attendees for taking time out of your busy schedules to attend this special webinar. Please don't forget to subscribe to our YouTube channel, Rampver Financials, and we look forward seeing you all again in our future events. With that, IMG, maraming salamat po again. This is Morgan De Guzman saying thank you very much. Stay safe and may God bless us all. Ingat po tayo.